Another aspect that I want to cover today is case scenarios. Now, to set up the parameters of this case scenario, I want to give you a range of what we're seeing and the outcomes of these particular clients' cases. Now, for example, we have a homesteaded property here in Florida that the customer was past due for 6 months on a mortgage. They were served 45 days prior, meaning they were served their foreclosure 45 days ago. Now, the customer's objective in this case, which is many of them, is to keep their home and to defend the foreclosure. Now, at H4H Consulting, what we do is we have some preliminary measures and standard operating practices, and one of those is we do a written action plan for each of our clients. We personalize it as best we can to give an accurate feedback to what your situation is. So we look at your financials. In this case, we call this written action plan for this customer. We looked at their financials and found out they were below, they had a deficit of $1,950 a month, $1,950 a month. So our advice to this particular client was to, first of all, since you've been served foreclosure on, is to retain an attorney. And then from our end, we also pre-screened them for a modification and came back as they would possibly qualify for modification. And the two option scenarios that we gave to the client is you're looking at option number 1, looking at saving $625 a month. Option 2, saving $918 a month. Now, what happened? What are we looking at with this client's case? With the possible options, and these are going to be pretty typical for most clients because that just so happens to be what you most often see as a settlement situation. But we're looking at modification as a possibility, short sale, or deed in lieu. Now I want to take a moment to explain, to reiterate, what a short sale and deed in lieu are. Now a short sale, again, if your balance on your mortgage was, in this case, $100,000, and a pretty typical example here in Florida, we've got many properties with under 40 to 50% loss in value. So right now, if your mortgage balance was $100,000 and your new value was now, in today's day market, $50,000, well, you'd have to get the lender, you'd have to find a buyer to put an offer in to purchase the property and get the lender to voluntarily agree to allow you to sell that home to that other buyer, and also with the terms of what are they going to do with that deficiency balance. Are they going to ask you to pay it? Are they going to absolve you of the payment on it, the obligation on that $50,000? That's why you need someone to actually help you navigate through those settlement options. A deed in lieu. What is a deed in lieu? Well, a deed in lieu is where typically you just hand over the keys back to the bank and you move out. In most cases here locally in Florida, they would just typically foreclose on the property and then sell it after it goes through foreclosure. But in essence, a deed in lieu is just handing the keys over, no selling to another party. That's what a deed in lieu is. Now, back to the case scenario that we have, the possible options I just discussed for you. Well, what happened? Well, the modification, we actually got approved for the client. Well, what did we advise them to do? When we got the modification back, myself, along with their attorney at the time, advised them to decline the modification. And there's a couple of reasons why. Now, it was temporary in nature. The financials were not near enough to really give them true relief on their monthly budget deficit. So we advised them at this point in time to move on to all their alternatives, that one of them being a short sale. Now, what happened in this particular client's case? Well, we got a short sale for them done. They were, as part of the settlement terms, they were given a $10,000 promissory note. Now this note is basically a new loan for 0% interest rate in this example for a 120-month term for a very small manageable payment. They agreed to sign the promissory note. Well, in lieu of that, what we were able to get for them is to get them the house sold and to get them waived on any possible deficiency judgment. For in this particular example, they were looking at over $100,000 deficiency judgment. And being that it was a homesteaded property, there was no tax implications afforded to the customer. Now the next case scenario that I want to look at here is with an investment property here locally in Florida. Now this property was vacant 10 months and a customer was served 5 months prior. 10 months past due, and they were served 5 months prior. Now the objective for this investor, and it's a little bit different from what I typically see with homesteaded customers who live in their properties. A lot of investors view these transactions as an asset or a liability. So in this case, they saw it as a liability. They were wanting to give up. They just wanted to minimize the damage impact to them. Now, we did our preliminary measures with this client, and we came back and showed that they had a $1,200 monthly income surplus. So obviously they were being foreclosed on, so we had them retain an attorney, and we pre-screened them for modification, and unfortunately it came back as a turn down. Now, part of our analysis with an investor was a little more thorough because they have particular additional needs. We did a rental analysis on this particular property and showed that they had needed an average of $3,000 in repairs done, where your average rents on this property were about $1,000 a month. So again, the next category is, what are their possible options? Well, we're looking at, again, a short sale and a deed in lieu in this particular case. Well, what happened was we had the attorney negotiated settlement, and they were offered, our client was offered 4 months or 120 days to short sell the property, or they were going to be granted a deed in lieu. And the result is that we weren't able to sell the property, unfortunately, but we still were granted the deed in lieu for our client, which again was hand the keys over to the bank, and our client was not afforded any deficiency judgment. So they were absolved of the deficiency judgment in this particular case, which is looking over $85,000. Again, this is just one of their properties. And the last case scenario number 3 I want to go over. In this particular situation, there was a homesteaded property. This lady was 60 days past due on her mortgage, and she had tried multiple attempts in the past unsuccessfully to get a modification. I found out a particular of interest to point out that she was going through a tough time, like many of us are, and she was going through a divorce in this situation. The objective with this scenario was she had a family to support. She wanted to stay in the home and reduce the payment. Again, pretty much the main common objective for most homesteaded customers. We went through our preliminary measures with this client. We did the written action plan for them and saw that she was $480 in a deficit, a monthly income deficit. We pre-screened her for the modification, which we do up front for all of our clients, and it came back as a yes. And these possible savings was scenario number 1, where she was saving $950 a month, and scenario number 2, where she was saving $1,235 a month. Now, what are the possible options with that? Again, the standard, most commonly come across options are modification, short sale, deed in lieu. We try to gear our settlements towards what the client wants, and in this case, we're trying to have her stay in the home. Well, good news is we got the modification approved, and we advised her to sign that because it was one of the permanent loan modifications, and as a result of that, she signed the modification, and she saved over $990 a month in savings, and after a 9-day trial period, we got her, obviously, final approved for that. So she's able to stay in the home. And I was very happy to get a successful resolution, especially for someone going through such a tough time. So to get started, go to our website today at H4H Consulting.com and pick the package that best suits you and begin to fight back. Don't wait, don't hesitate. The bank certainly won't. And remember, there is hope with Hope for Homeowners Consulting.